Greetings, Zach. I know you go by Zach, isn't that correct? Or Zachary?
That is,
Yeah,
yeah. Zach's great. Happy to be here. Thanks.
great to be here. I've interviewed a number of miners, and I am very fascinated by Bitcoin mining and the mining space for many reasons. But how are you this fine day? And are you're based in Nevada? Is that correct?
Yeah, that's correct. I'm here today in sunny Las Vegas.
Oh, Las Vegas. There's a lot of
Yeah.
things happening in Nevada with companies like Tesla and Bitcoin mining. And is it fair to say, we'll just jump right into a lot of talk about regulation and everything else. Is it fair to say that the regulatory climate in Nevada is friendly towards disruptive technologies and industries such as Bitcoin mining?
Yeah. I would definitely say so. So, there's definitely, room to grow, room to innovate in Nevada. There's reasons we're headquartered here because of the business climate. Most of our mines are actually in Georgia. But as far as a business structuring point of view, Nevada's a great place to be.
Awesome. Georgia, that's interesting. Do they have abundant energy like Texas? Or
Yes, they definitely do. What attracted us to Georgia was actually the energy profile. So they've got a lot of nuclear energy, and actually, there's the first nuclear plant to come online in decades in the U.S. is actually in the process of being ramped up in Georgia right now. That's Vogtle 3, and they just turned it on a few weeks ago, actually.
that's amazing. So then when it comes to the whole ESG narrative, you tick the nuclear box, all is good. And may I ask what percentage is renewable energy for CleanSpark today?
Yeah, so right now I think we actually rank amongst the highest as far as carbon-free power in our total mix. Last year, we always measure on an annual basis. We just released our report actually last week. So for any of your listeners that want to check it out, it's on our website. But we actually exceeded 90% carbon-free power for all the power we used last year.
Wow. Well, I wonder how some of the folks in Congress, etc., rebut that, when you consider how good it is.
Exactly.
So I want to ask you, before we jump into the nitty gritty, we'll focus a lot on, diversification and financials and dividends and all that type of stuff. But do you, in your position, do you feel a sense of moral duty being part of the Bitcoin ethos right now with everything that's happening? I'm sure you've been tracking Operation Choke Point 2.0 and all that type of stuff, or do you just see it as a business? I'm interested in how you feel about it, per se.
Yeah. For us, what got us into this space was actually that energy journey. We were operating in the alternative energy space. We were building microgrids. We were participating in demand response programs. And myself leading the company, I was frustrated. The regulatory environment around energy in this country, it's a little bit broken. It stifles innovation, and it's hard to get anything done.
Yeah.
And so, I got exposed to Bitcoin mining because I went to a data center and we were talking about energy. And the more I got to learn about Bitcoin and how it can actually change the way that we interact with the energy and the world around us, that's what, ultimately resulted. Instead of selling them an energy product, we bought the data center and since then have gone all in on Bitcoin mining. And it's been a great journey ever since then. So from a moral obligation point of view, we think it's incredibly important, but we think it's part of sustainability, not just in the term of the word sustainability from an environmental point of view, but sustainable from a business practice point of view. If you can be above board, for example, if Congress was to say that, Bitcoin miners have to use more than 50% carbon-free power, well, we're in a defensible, sustainable business setting already. So we see it as both defensive, but also the right thing to do. And it's just the best thing for a sustainable business practice in this regulatory environment that is just the realities of the world we live in.
Yeah, it's very interesting because we're seeing a lot of, at least from blockchain developer perspective, a lot of people going offshore for fear of the regulatory environment. And I'm personally very concerned that the US is being left behind when other economies around the world are opening the doors. But glad to see that you are in that defensible position. That's incredible. Speaking of defensible position, how do you or do you even look at the competition? Do you analyze them, how they operate, or do you just focus on your own knitting per se within the business?
We definitely are aware of what our competitors do, but I think that we do it better. I'll say, and rather than do what everybody else is doing, we've frankly done things very different. We have grown during this bear market, and that takes doing the opposite of what everybody has done. We made a choice to not lever up with a lot of debt a year ago. That positioned us where we needed to be. We also went from, a HODL strategy to sell Bitcoin to get more Bitcoin strategy long before anybody else did. Actually, a year ago, November, is when, what happened is we made observations that pointed to, you know, unsoundness in the mindset of its participants. And so we felt that, we'd probably hit a peak at the time in the bear market. And now was the time to, do what is a good investment strategy. And that's dollar cost average. And we dollar cost average by selling our Bitcoin to support production, avoid dilution at the time, and to support growth directly with the Bitcoin that we had on hand.
Yeah, that's interesting because, as you know, I run tons and tons of ratios on all the miners, and I build ratios on ratios. But one of them, I've got the 16-point scoring mechanism, and one of them is the HODL ratio. And back before November, when I started noticing you guys selling Bitcoin, I gave a large load, about 20% to that score, because I thought, like everybody did, well, Bitcoin's going to $80,000, $90,000, so it makes sense to hold it. But what it was a genius move because in hindsight, especially during the bear market, HODL strategy is a catastrophe. You just sell stuff as quickly as possible and scale up the amount of rigs you have. By my calculations, I think you've got the third largest number of rigs. You've got about 69,000 rigs live today. Is that correct?
We do. We have a high 60s. So I would stand a correction. I think it's about 67, 68,000 rigs
Okay.
live right now. Yeah.
It was close enough to track that too. But it was incredible to see that movement and how things had changed. And, having low debt also proved to be a very prudent move. Do you think any of this financial strategy would change as the market changes? If you imagine a bear market scenario, okay, we're going into a bear, sell Bitcoin as quickly as you can and scale up rigs for the next bull run. And do you believe that strategy would change moving into a bull run, which we clearly are right now?
Absolutely. And I think what's important is, what's important to me and what I'm always talking to our team about is strategy over ideology. We operate in a space that is very ideological when it comes to Bitcoin. And we are true believers in Bitcoin, in what it's going to do to change the world and so on and so forth. But we measure every day differently than we measured it yesterday. As soon as we think that we have a strategy that should be unchanged, we're on the wrong strategy.
Yep.
And so always having flexibility, that's really what we were aiming for in controlling our debt is one, knowing that, we have a volatile asset. So it's just a bad idea to have a huge amount of debt, but we were looking for flexibility and the ability to be well positioned. So we'll always be looking to grow because a miner that doesn't grow with hash rate, on a trajectory to be ever increasing, you're taking steps backwards every day. You're not growing. So growth is going to be important on a long-term basis. The speed of that growth, though, should be very measured in, bear and bull runs. Bear runs is about being positioned and having scale at the beginning. And then, from there, you can make the choice. You can make the choice to build the HODL, build capital. You can make a choice to return capital to shareholders. All of those become a possibility when you're well positioned. And so positioning is what we're focused on. If the market shifts, if the market changes, we will absolutely make a change with it.
I love that. In investing, when I tell people, always keep your tap dancing shoes on, which means be ready to move in and out of positions, be flexible with your strategy. Absolutely critical. Always examine your theses. You touched on hash rate and you mentioned a very important point, which sounds really obvious when you mention it, but I don't hear other people talk this way. And that is, you need to grow as hash rate grows. So this is the hash rate and how it's gone up 600% in 600 days. I always like to try to find patterns and numbers. That's pretty astounding. Do you try and measure and plan around future growth of hash rate as we go forward? Or do you just roll with it?
You know, you definitely have to plan for it to be there. And, any guess of where difficulty is going to be, which of course affects the total reward you get, per hash and the hash price is a guess. But you should always plan for it to grow. And the reason is when economics are better, everybody thinks that, oh, a bunch of rigs that are brand new got plugged in has been I'll use the last even 30 days as the example. That's not what happened. Instead, what it was is economics improved from 19 to 28,000, and old rigs that have been sitting idle got turned back on.
Exactly.
And so you should always know that there's idle capacity that's going to flex. And the only time that the idle capacity goes on or offline is when economics change. Now, when halving occurs, it will change those economics, and that's when you'll get pieces of equipment that will be truly obsolete, right? There are people that turned S9s and S17s back on, and those hadn't been profitable for over a year, right? So, but you have people that were, I actually know of a few groups. We of course weren't one of these, but there were groups that were being paid to pick up these old machines for free. And, the cost of moving them was more than they were worth. Well, those people that took those machines and plugged them in somewhere are now making money. So there's always going to be somebody that's willing to take the risk to have a machine plugged in, to have infrastructure sit idle, to just grab it here and there based on their cost of capital. Our approach is going to be different than that, but that's always going to be part of the equation and growth of hash rate.
Yeah, excellent. And speaking of electricity and the cost to run these things, may I ask what your average cost per kilowatt hour is and how that factors into this calculus of profitability?
Yeah, absolutely. So we've been very open that we're on a market-based structure in our facilities in Georgia for the most part, and how those behave is when we saw obviously the conflict between Russia and Ukraine, it affected natural gas prices. It spiked. That means our energy prices went up. But our background is in energy and in making predictions about how the power curves behaved. We felt very comfortable in our ability to operate. But also, most importantly, the best thing about the Bitcoin protocol is when energy goes up, miners unplug. And if you have a more efficient machine and more cheaper power, you get a bigger piece of the reward. So it worked out really well for us. What I can say, and where our bets have proven right, is what we've disclosed. I obviously have to keep everything, public. And in some of our most recent disclosures, we talked about we've seen our wholesale rates be as low as 1.8 cents over
Wow.
this past quarter. So we're in the right place at the right time with highly efficient machines. And on top of that, wholesale rates, it varies. So we've seen as low as that, and we've obviously seen higher than that. And it's about playing the averages and managing in your fleets in an active way. That's the best thing about Bitcoin mining is you have a flexible load. You can turn it on, you can turn it off when it makes sense. We, have had extremely high uptime over really since January 1st, incredibly high uptime as much as 98%, because with great power rates, you just run through everything. All miners had a difficult December, but the lack of production led to immense cost savings when we weren't running. And it was also good for the surrounding communities around us. When we come offline, all that energy goes back, and it actually helps keep the rates lower for your traditional ratepayer.
Yeah. A friend of mine just sent a picture this morning. He's got 3 rigs running in his house. Another friend of mine has rigs running in his grandma's house up in Michigan, which keeps her house warm in the winter. But in terms of if somebody is mining at home with 2 or 3 little rigs that may be old ones, I always say they need to be able to have their electricity at least no more than 8 cents per kilowatt hour to be cost effective. Would you agree with that? Or once we go beyond $30,000 Bitcoin, it doesn't matter anymore? How do you view
You
that?
know, Yeah. It always varies based on difficulty. So right now, hash price, so basically the value per kilowatt, is floating right around 8 cents.
Yeah.
So it just then depends on, can your machine produce, a terahash of value on an hourly basis at a lower amount. So, if you have older equipment, it probably needs to be a little lower, closer to like 6 cents.
Mm.
If you've got, an S19 J Pro, it's probably right around that 7, 8 cent mark right now. So, home mining is tricky, but it's can sure be a lot of fun.
Good. I'm gonna throw you a curveball here for a second. Everybody's talking about AI, and I read somewhere that Google believes, and they're making big investments in ASIC chips because they believe ASIC chips can actually run for very specific AI algorithm problems for calculations. And this could be way out of left field, but do you believe that could be a diversification channel for you guys down the line to help power AI engines with ASICs chips? Or is it too far fetched?
There's always the possibility, but I'm going to tell you why there's a technological gap there between ASICs. So ASICs, of course, are application-specific chips that do one thing and they do one thing well. Now, the way to really pull that data together for AI purposes is you basically have to create data clusters. And that data clusters is what creates machine learning, because there's all these different pieces that are going on, right?
Yep.
The ability to link all these machines together, sure, we're all pushing data into the pools, but I do think you would see some really big challenges on the ability to actually pull this off. That question's being asked about, oh, if I used to mine Ethereum, I've got all these GPU rigs. Can I turn those into truly power AI? And the answer is most of the chips that were used for Ethereum mining, you can't do that. You can't link them together. We, of course, did an Ethereum mine, and I'm sure there's bright minds trying to figure out how to make that possible, and hopefully they can figure it out. But there's some real gaps in the ability to take a machine that's doing something and connect it with a bunch of machines to create the clusters that are necessary for machine learning. So from our point of view, there's some interesting things happening, and when and if they're proven out, we would definitely take a look at them. But we're just laser focused on Bitcoin mining the very best that we can, and doing one thing and doing one thing really, really well.
Yep, that's the way to be. In fact, looking at another little chart here, let me pull this up. And just to show the audience how really good you guys are, this is the market cap for Exahash versus Bitcoin mined per month against the competition. And you can see you guys have the least amount of capital per Exahash and the second highest amount of Bitcoin mined per month. But there has been a slight change lately in Feb. And here you see the Bitcoin mined per month, specifically for CleanSpark, and how I track. And I hope my numbers are right. But February, you can see the big dip, big spike in January, which might be reflective of what you talk about, that pent up interest and how things came back online real fast in January was when the price went up and you guys did very well, but you can see a dip down. Is this because, for the audience, is this because you believe that the hash rate has gone up so high, so fast, or for some other
Yeah.
reason?
Yeah, so February, there's really two reasons for the decrease month over month. Is obviously February's 3 days shorter.
Hmm.
So in the month of February, and again, I apologize if these numbers are a little bit off, but we were in the low 20s, I believe, in February on a daily basis. So 3 days difference is approximately
60.
60 Bitcoin. So that makes up part of the gap. But absolutely, what we saw was difficulty decreased in December because power prices went up. There was also very, very cold weather. So you also have an issue because cold weather leads to power prices going up, but also cold weather can be damaging. Obviously, Bitcoin and how our computers run is somewhat industrial. So when it's really, really cold, you don't want to run in the same way. So a lot of miners, including us, we shut down for the really cold period in late December. And then we turned back on, which led to difficulty going down, which we benefited from in January. So, accounting for a 3 day delta, but difficulty has gone up ever since the beginning of the year, fairly consistently and at a fairly rapid pace because of the economics improving, leading to some older machines turning back on.
Yeah. Okay. Good insight there. I thought the machines generated enough heat to keep the industrial warehouse warm or whatever, but that's obviously not the case. Um,
They definitely can, but you start to think about potential damage to silicone. Silicone is a very tough material, but thermal shock can cause damage. So you think of the input temperature, again, being in outdoor spaces. If that is, close to zero,
yeah.
Fahrenheit, very cold, and then its output temperature is much higher, the
God.
beginning and end of that chip you can risk damage. So you can be cautious or you can run through. We actually made a choice to take the cautious approach because obviously rigs are not cheap commodities.
No.
And we just basically measured risk from a cost benefit analysis. And then when you pair it with the fact that energy prices went up, it makes it a pretty easy decision because your margins end up kind of thinning out with the higher, it was about a 5-day period. Energy prices spiked because everybody in their houses, they're all home for the holidays. It's right around Christmas time. And, everybody's cranking the heat up. And so with those energy prices going up, margins are small and it's not worth the risk of damaging, the chips.
Another interesting angle on energy, juggle these ideas. A lot of people like Elon Musk and Shamath Palihapitiya, they talk about the big fusion reactor in the sky and the potential for the marginal cost of energy going close to zero, or maybe even zero, or sometimes even negative. If that's the case, then the whole competitive advantage will be owning rigs if energy goes to zero. How do you view that, or do you think that's so far off it doesn't really matter?
I think that you're right. The advantage would be, owning rigs and infrastructure. Obviously, owning a rig with nowhere to plug it in doesn't mean anything. But I think we would welcome a period where energy essentially becomes free. But I do think that we're decades away from that. So I think also you think of how compute works and, Moore's law and everything else. By the time energy is essentially free, where are chips really going to be at? And so I think that the equation kind of really comes together. And we probably start to look more for what the fees on top of the system really start to pay for things. Bitcoin will probably go on a long-term basis, of course, the way a lot of commodities go. When value of gold or something goes up, more people want to mine, margins thin out, gold goes down, people exit it, kind of ebb and flow. But margins on a 25, 30-year basis will probably continually thin out. I think in the next 10 years, there's a really great opportunities through the next two halvings for margin expansion to be very significant. And then I think it starts to turn more and more into a traditional commodity behavior where you start to see ebbs and flows and barriers to entry. It's going to be all about scale. It's going to be about owning the infrastructure and assets. And if you have scale, you have it or you don't. It's really hard to, come in. Scale becomes a barrier of entry in a really big way. So
That's so interesting. Your background, you are a CPA, correct? When I dug into your
yes,
background, um,
yeah.
I I am a finance guy myself. Do you believe it is a competitive advantage having a CPA as a CEO of a mining company because you know how to allocate capital, you know how to manage costs and expenses and think strategically? Do you think that's a big edge as to why you are so capital efficient compared to your competition?
I'd like to think it has something to do with it. Obviously, I've got a great finance team also that backs me, but I do view things through a financial lens, and I think that's important because our business is simple when you really break it down.
Hmm.
It takes a large amount of capital to get established and to grow and to actually mine, and then it's about efficient capital use on the efficiency of machines. It's
Yeah.
just a simple measurement of input versus outputs. It's all just financial engineering. And I think that, again, from a strategy over ideology point of view, being able to financially engineer the decisions that we make is really what leads to, we believe, better and sounder decisions in the space, as opposed to just trying to grow. We're absolutely not in the business of growing for the sake of growing. We're growing because it's the right thing to do on a financial engineering basis.
Interesting. And so you would say that your sustainable competitive advantage is that ruthless financial rigor, perhaps, in how you manage the business?
I would think so. I really think that it matters how we can, measure things. I think it's also about taking out some of the emotion from the decision. And I'm going to give you an example of that. Rigs went astronomical
Yep.
in their value cost per terahash. So you had an XP that people were paying, well north of $100 a terahash, or they're paying $80 a terahash. And for the very same thing, you can acquire it today for, a quarter of the value. But even at that value, is it the right choice? Do you pick the XP because it's the biggest and the sexiest machine from an efficiency point of view, but the current cost still being offered up, the ROI is more than twice as long as choosing a different rig. And so we announced, obviously, that we bought 20,000 of the J Pro Pluses. They're less efficient than the XP, which of course does matter. I just told you, efficiency is what it's all about. But if I measure the time it's going to get a return of capital to the company
Yep.
and shareholders, when it's double, it's a pretty easy decision. So again, it becomes, do you pick it just to pick it because it's an easy headline, or do you pick something because it's the right move?
Yep.
And when XPs are the right move and when they are the right price, we'll buy those too. We do have a portion of those in our fleet. I think right now it's about 5% of our fleet is all, because we are going to ruthlessly push to have efficiency at a great level by the time halving occurs, which right now is actually about 365 days away. Yesterday, actually, current predictions based on current hash rate. And at that point in time, a line in the sand will be drawn, or to be about who's the most efficient. But if you blew all your capital a year before buying the more efficient machines and still don't have a return on that capital, you're actually at a disadvantage when economics completely change.
Yeah, it's interesting. You spoke about the halving that's coming up. Let me just pop up this chart here, which I'm not saying history will repeat, but this is the performance of all the miners after the last halving, circa April, May 2020. And we all lived through that. And the miners went completely bonkers, as you can see. And then they mean reverted back down to earth. Do you think the miners will go bonkers this time around? Or everything will be more steady? Like it
I,
was
obviously a prediction of, stock price and market cap is something, it would just be a guess. And I won't necessarily comment on ours, except for what I will say broadly. I think that there's a really important opportunity that we are trying to build towards. And that is, there will be winners and losers at the next halving. And there will be that in a different way than there has been in the past. And if you look at miners and how many were actually public and had any scale in 2020, it was a pretty small number of
yeah,
companies. Now we have, between 20 and 30 companies of different sizes that are publicly listed, either on, OTC or major exchanges. And our belief is it will come down to who can actually stay plugged in through halving. So at halving, the Bitcoin rewards gets cut in half. So we go from 6.25 to half of that on the reward per block. So if let's say Bitcoin remained flat, which, we'll talk about that in a second, but if Bitcoin remained flat, that means everybody's revenue and their ability to pay for their power and so forth got cut in half. You better have rigs that are more efficient and power that's cheaper. And being on that efficiency curve, if you look at miners and which miners have efficient rigs and which ones have less efficient rigs, there's what it's going to come down to is less efficient miners in a flat Bitcoin environment will actually have to unplug. And when they unplug, it will shift rewards. The difficulty will go down and it will shift rewards into the miners that have been able to continue to be plugged in, and a balancing effect will occur. My personal belief is that if you are not south of 30 watts per terahash on a fleet efficiency, you will have problems. And the further down you can get while balancing that cost of capital for new rig and new infrastructure purchases is the strategy that we're trying to target. Now, I think what really happens though, and what a lot of people, including myself, would expect from Bitcoin. So let's separate that from stocks and so forth. But Bitcoin, once it's cut in half, becomes a little bit more rare, right? This is where it's an anti-inflationary or deflationary mechanism that's built into Bitcoin. It should push Bitcoin's value up because instead of there being 900 new Bitcoin produced into the ecosystem on a daily basis, there's only 450. So if you want more Bitcoin, there's less new Bitcoin coming to the market. So it's just supply and demand. And that, if that occurs, obviously, that creates an opportunity where Bitcoin economics improve dramatically. And obviously that would create positive income dynamics for miners that are operating in the space. And that will create opportunities, again, for the best positioned miners to do quite well, assuming that that occurs.
Exactly. I don't know if this will pop up, but this is a weekly chart for everybody out there, and it just shows you what Bitcoin has done over the last 5 years, and it's been quite dramatic with the two bumps in late 2021 or April 2021, and then November 21, the second top, and then right back down to that bear market. And here we are rebounding hard, and the trend has clearly changed. So, speaking of that, you believe we are far out of the bear market at this stage? Bull market is on?
I definitely am optimistic about the direction that we're going. And I do believe that we will see Bitcoin continue to improve. It's a volatile asset, and there are both tailwinds and headwinds in the macroeconomic environment, right?
Yep.
So obviously, you mentioned some of the things that have gone on with banking and what's being called choke point 2.0. It's pushing some people into Bitcoin and pulling some people out. I'm incredibly bullish myself on Bitcoin, and think that we're on a good trajectory. Where's the bottom? If everybody could call that, it would be great. But I really think we've seen some of the worst of it. And I think what the key with this is Bitcoin's value is, can be measured in a couple different ways, but its ability or its adoption is really what drives Bitcoin's value.
Oh, yeah.
And Bitcoin's adoption is increasing every day. There's headlines about all kinds of things, but the one thing that is happening is obviously there's a lot of, I'll call them altcoins, the other alternatives, and Bitcoin is just different than everything else. And with a lot of the pressure that's happening on the regulatory side to those other Web 3.0 assets, I think that's part of the reason that's also pushing people into Bitcoin is when they recognize it is sound money, that it can be a true store of value. And as adoption increases, the value will increase. So, you set all the other factors aside. I think you measure adoption, and I think that Bitcoin is really proving itself out right now.
It is, and it has the best advertising campaign running right now as well since the global financial crisis in 2008, 2009. One other quick item now that I've got the slides up, miner reserves are really very, very, very low, historic lows. So the whole HODL game for miners has gone out the window. I think people are now seeing what you guys are doing, and they're selling as quickly as they can to scale up their rigs. Would you agree with that statement?
I agree with it, in a couple different ways. I do think that, people have, I'll call it come to see the light, right? That, if you're going to hodl everything, then that becomes ideological. You're basically taking value and you're putting it on the shelf and you're hoping for the best, right? You have to pay attention and say, well, who's paying to keep the lights on? Who's doing all these things? And there's debt was a source that has since disappeared, right? You used to be able to borrow against Bitcoin, but obviously if you put Bitcoin in somebody's custody, which is a big reason we never borrowed against our Bitcoin, not your keys, not your coin. If you hand it to somebody and take fiat from them in exchange, what happens if they're not credit worthy? We saw so many, exchanges go down that we just saw it as too risky.
Yeah.
And so that's the reason we didn't. So otherwise, it's equity. And we see equity as an important tool in this environment, but we think that we should be able to keep our own lights on. And we do that with Bitcoin. So we don't expect our shareholders to pay to keep the lights on or to pay for our team or to pay for anybody's salary. We do that with Bitcoin, and we use our equity to grow. Our
Yeah.
equity is to add value. Dilution obviously is a concern for myself as a large shareholder company, for anybody else. But, if I know that dilution is really accretive, exchanging shares for growth that will be worth far more. That's the point of a company's equity strategy. If you look at our growth last year, we did, we actually diluted 70% around that amount in shares.
Yep.
But we grew 228% in the same period. I look at that as a shareholder and say that's a fair trade if I'm playing the long game, right? That does, of course, affect, the day-to-day tick of the stock. But, when you play the long game and you're looking at it at the value that we're going to have, 6 months from now, a year from now, it's the right move. And we're here to play the long game.
I ran a very interesting stat. I'm sure you probably do the same thing yourself. Tell me if you don't. I'd love to know that I do one that you don't, and that is calculating the extra exahash per share dilution for all the miners. You guys are the most efficient, which tells me, and again, correct me if I'm wrong, when you issue stock, you're not lining the pockets of the C-suite, but you're putting it in rigs to get more Bitcoin, to grow more rigs, to take advantage of the next 12, 13 months before the halving actually happens. And then, of course, have the scale beyond that. Is that fair to say?
I think it is fair to say. It's interesting because we do monitor that, and we do push to be the most efficient in our use of that equity capital and where it goes. And, as part of that, though, we're very open and frank about it. We talk about that as being part of our strategy, that we're going to use equity to grow. We're not hiding behind anything. I think sometimes we actually get a little flack for it because, every shareholder wants the company to grow and dilute the least amount. We're actually doing that, but we're also openly talking about it. I think there's a lot of other companies that are not as open with their shareholders. They hide it below the line in the
Yeah.
fold of, the press release of where the money came from and how they made it happen. And we would rather be, open, transparent about what we're doing, even if it takes a little bit of heat. But to your point, if you really measure the details, we really do believe we're doing it the best way of any company.
Yeah. So what another calculation, well, while we're on the subject of dilution, is there more dilution planned for 2023?
We have growth planned. So as part of that growth, we will be issuing shares. But as part of our plan, we measure ROI with every single, issuance of stock. And so we will outgrow our dilution is our commitment to the shareholders.
And if you do, I ran some numbers as well. If you're doing, you say you're minting 700 Bitcoin a month, and the price is say 40,000 or 60,000 or whatever, you say 40,000, 700, that's $28 million monthly profit. Annually, $340 million a year. That's a big chunk of cash. That could put you in a position to not necessarily dilute more shares, but actually pay dividends or do share buybacks. Is that on your horizon at all, or are those numbers crazy?
No. We look at it this way. Currently, because we have been EBITDA profitable, for most of the months of the last, several months. We're currently selling that Bitcoin and turning it into rigs that produce more Bitcoin, right? I do expect that, over time, as things balance out, that we'll instead build reserves. We don't have no plans, of course, is an important thing for me to say. We have no plans to declare any dividends or do any stock buybacks or anything like that. But on a long-term basis, I do believe that we will be a company well positioned from a cash flow point of view to make those things reality. So although it's not a plan now, we expect, again, if you take the long game, that's the direction that we expect to do, is to be spitting off a lot of or a lot of Bitcoin that turns into, free cash flow that we can do all kinds of things with, including return it to shareholders.
And that's the whole gambit. That's why I'm also fascinated by MicroStrategy and Michael Saylor, because you know what their plan is, and their break-even point now is 29K. Once Bitcoin price exceeds that level, the whole calculus changes as to, them taking on debt, etc. I'm going to show one quick chart. As you can see, I got a lot of charts. This is again, we're still on the finance topic. These are projections from Wall Street as to how much earnings CleanSpark could have. I don't think Wall Street really understands how Bitcoin miners work. And you can see here, you said you're EBITDA positive the last couple of months. Here, this forecast minus 140 million, give it or take, out to 2024 in earnings. Do you think that is incorrect, correct, or if the Bitcoin price goes up, that changes everything?
Yeah, I would obviously have to see the details to say for certain whether it's incorrect or correct. But I can say that our game plan is to produce profits and earnings.
Yeah.
And I guess I should have said adjusted EBITDA, because obviously we have a lot of depreciation and things like that, and other non-cash items that kind of weigh things down, that are just a factor of how the accounting rules make you value certain things. But I think that this model, without knowing all the details, I would expect it's likely conservative. That's part of what analyst jobs are. And then our job is to go out there and beat the analyst expectations. So if
Yeah.
these are the expectations that they're pushing forward, my job is to go out there and make sure we beat them.
And again, with my simple numbers, 700 Bitcoin, take that to 60K, you're easily making north of $500 million a year. I don't know, I can't remember exactly how much overhead is part of that, but you become a very profitable business very, very fast. It's all a function of Bitcoin price. And that's the whole game theory of this whole model. Speaking of Michael Saylor, MicroStrategy, they're trying to do some interesting things with Bitcoin and micropayments and stuff like that. And then Jack Dorsey, although he's been in the headlights with some kind of custom mining rig capability. Do you ever see a partnership with any of these types of companies down the line, considering your leading position right now in terms of capital efficiency from mining?
I think there's definitely some possibilities, right? What I will say is our plan is to stay laser focused on Bitcoin mining. We think that's part of the reason we've been so efficient with our capital too, is, R&D can be really exciting.
Yeah.
R&D gets really expensive. So I look to those companies, and they have businesses that are in payment processing or businesses in software. I think that what they're doing is going to help make the Bitcoin ecosystem as a whole more valuable, and it'll make Bitcoin more accessible and more usable. And again, that drives adoption, which hopefully drives, Bitcoin's value on a long-term basis. I do think there's opportunities where, if a fund wants to source Bitcoin and write an agreement directly with a miner, there's lots of interesting ways to, finance miners and their growth, and the ability for MicroStrategy or another company to acquire more Bitcoin, right? So I think there's a lot of financial connections that could happen. I don't see us joining into the payment processing space or anything like that. Obviously, if they do other things, if they have a mining pool, or if they, whatever that may look like, there's lots of opportunities in the space for innovation. We always like to look at new things, but we also like to stay focused, and we think that that's the best way to use our capital. So when and if there's a good opportunity, we would definitely be all ears. We would probably just be slow to jump into it, because we do measure our capital efficiency quite closely.
Yep. So I'm a trader, by trade, I should say. How do you time your Bitcoin sales? Like, do you just have a mechanical process around a certain time of the month, or is it weekly, or do you wait for certain tops to sell at a right price?
It's a very human interaction, is what I will say. So we obviously pay attention to, Bitcoin supply when we see volumes go up, or when we see volumes decrease. I would say we're probably outperforming by having a human aspect to, what we would otherwise get if we just did a set it and forget it. And we actually measure we'll model if we just did a strategy, and we'll take a reverse look and say, what did it look like, as
Yeah.
opposed to what were the real-time decisions that somebody made to click a button that says, sell a little Bitcoin here, sell a little bit there, and we've historically done a little bit better. So really, it's the human real-time interaction. We, of course, set loss limits and things like that if there was going to be a big dump overnight on Bitcoin. But we really do. We take real-time, real-world measurements, and that's how we make our decisions.
Awesome. And do you sell over the counter or on exchanges? Like if Michael Saylor knocked on your door and say, "Hey, I need 100 Bitcoin," do you do those types of arrangements at all?
We currently don't, but if he knocks on the door, I'll definitely open it up and have a conversation. We do everything on exchange currently, and we really do it based on regulatory scrutiny. It's really important that we don't open any new doors for regulators to be upset. So we use well-known exchanges. It's disclosed which one we use. We use Coinbase. Obviously, Coinbase is having their own headaches right now, but
Mm.
Coinbase has internal controls. They have SOC type 1 and 2 reports. They have methods and means. And also because they're public, we can see their solvency.
Yep.
And so we really believe that they're, fairly sound. Obviously, we looked at what happened to all the other exchanges that had less transparency. And we're glad that we, put our Bitcoin where we put it. I do think as, regulation can stifle innovation, but it can also create the platform and foundation for innovation to occur. So I think that will change on a real-time basis, because right now regulation is focused on exchanges. And I think most exchanges, Coinbase included, they're asking for the rules and they're not getting them. When the rules are there, I think it will create new ways for us to interact in the environment that we won't have to worry about, missteps that right now the exchanges just kind of take care of, and it's their problem and not ours. So, I hate to put it that way, but that's really what it is. We would love to be more innovative, but regulation does need to be a little more established on the exchange side for us to do more in that space.
Risk management first.
Mhm.
Speaking of other analysts, this is Blockware, a little chart from Blockware Solutions, and they're great and they put out great work. But the way they rank miners is very different to how I do. And I've done quarterly for the last 1.5, 2 years, at least 6 very detailed miner reviews. And you guys have come up number one 4 of the last 6 times. How do you think other analysts like Blockware Solutions rank miners, and what are they missing?
Obviously, there's a lot of opinions, whether it's Blockware or otherwise. Our belief is that one of the missing pieces is kind of the HODL, right?
Mm.
Um, the way we think about HODL on someone's market cap is that's almost like having cash that you would subtract off the balance sheet, in the case of a liquidation. But the enterprise value is really about Bitcoin production. And
Ruthless,
I of
ruthless.
course have to be careful how I put
Yeah,
this, but like I don't think that we've been properly rewarded what our belief is. We are outperforming our
yeah,
peers in very dramatic ways, in a production, in a lot of other capacities. There's a lot of things that unless you get really nuanced, you don't get credit for, such as capital management. And we think time will expose all, and we'll get credit where credit's due when certain events happen that maybe it exposes somebody else, or maybe it exposes everything where we believe we are doing right. And we're just sitting here patient. Our belief is keep the head down, keep doing the work, and keep hashing,
yeah.
and it'll all prove itself out.
Yeah, I've noticed that Wall Street has a hard time wrapping their heads around Bitcoin miners, and especially the best ones. But they'll get smarter in time. They also don't understand Bitcoin, so it makes complete sense. I'm going to ask you a question. This is I remember a guy called Kevin O'Leary, who's quite infamous of late. Well, he spoke about purchasing, I think it was virgin bitcoins, or not buying blood coins, kind of like blood diamonds analogy, i.e., clean, pure, ESG friendly bitcoins. Do you think that's ridiculous? Or
I
does that have
do.
merit? Okay.
Yeah, I do. And here's why. A Bitcoin's a Bitcoin, and Bitcoin's value will never, I don't believe, be successfully differentiated between one Bitcoin and another Bitcoin. That's the point, right?
Yep.
Over 19 million Bitcoin already exist. So to try and drive value to a Bitcoin that has a quote unquote, ESG background just doesn't match up with what Bitcoin really even is. Now, with that said, we actually participated in a pilot project with Sustainable Bitcoin Protocol where they audited our carbon impact in producing Bitcoin and they produced a secondary coin. And what that would allow someone to do. And again, this is their platform. We just participated. We're not involved in the issuance of the coin. And I'm definitely not advocating one way or another on that coin. But their thesis is a hedge fund or somebody that wants to hold Bitcoin and match it up with an ESG profile, they will basically purchase what's the equivalent of a certificate saying a certain amount of energy that did produce a Bitcoin, not the Bitcoin they hold, was produced sustainably. And so they would hold one of these certificates, which would be on chain, and they would also hold a Bitcoin, and they would just match them up. They're going to hold 100 Bitcoin and 100 of these sustainable Bitcoin protocol tokens, coins, whatever they may be. But it's really the same thing as matching RECs, renewable energy credits, to energy used. The energy used maybe didn't match up, but you offset it by purchasing a REC, and how that marries in the middle the same way that renewable energy credits do. I think it's much, much more likely that that path succeeds than it is that a hedge fund worries about sourcing the coins directly from a miner, because also it doesn't make sense for them as in their fiduciary role to pay extra for a Bitcoin that if they have to sell, they probably don't get any more than what the market is. So it makes more sense for them to purchase two different instruments that signify the ultimate goal of what Kevin O'Leary was speaking to.
Yeah. Brilliant. This has been amazing, and it'll really help the audience understand so much about how miners think. Final question. You nailed the top back in November. How did you guys do that? Was that accident or planned, or it's like, wow, this is something we should take advantage of because we need more rigs, we have to sell? How was that decision made?
It was actually there was something very specific that happened that we actually can point to as part of it. But really, it was seeing when behaviors get irrational around assets, whether it's real estate or anything else, it's usually a signal, the canary in the coal mine that behaviors need to change. And what actually happened is the XP release. And in our conversations, it's a great rig and we were interested in purchasing it. But when the actual ask was, and what we were watching others being willing to commit to, huge, huge amounts of capital, hundreds of millions of dollars. And they were not going to receive those rigs for 12 months. So if you think of your first, you're deleting any ROI off of that capital for a full year, and sitting in a pallet next to it was a rig that you can plug in tomorrow. So if you look at our behaviors, a year ago, November, we started selling Bitcoin and we started purchasing rigs, not on long-term purchase agreements, but rigs that were ready to plug in right then, because it was all about ROI and capital management. But we also we said, wait a minute, if people are willing to go park, $800 million and wait for something to show up for a year, knowing the risk profile of Bitcoin over the next, foreseeable future, that's now irrational behavior.
Yep.
And that irrational behavior starts to point and signal to a peak. So it came in two pieces. One was finding a much quicker ROI sitting next to us. And two was the signal that maybe behaviors weren't making sense anymore.
I love that signal. I might turn that into an indicator. Irrational prices for rigs and then long lead times of 12 months. It was a brilliant thing. Well, Zach, I know you're a very, very busy man. Thank you so much for your time. Any questions for me or the audience as we wrap here? And I'll add your Twitter handle and link to your website as well, so people can look at that documentation. Any questions for me?
No, I just appreciate you having me on, and if there ever makes sense to do this again, know that I'd definitely be open to it. It's been great to have a discussion, and thanks for letting us talk a little bit about CleanSpark, and look forward to interacting with the audience on Twitter if it makes sense.
Absolutely. And I will share with you my mining models too. So you can check them out all on Google
Excellent.
Sheets. And you can.
That'd be great. I look forward to it.
Okay, awesome. Thank you so much, Zach. That's a wrap.